we be shorting this market at this point in time? Welcome to the channel, guys. My name is D. Anthony with Evolution Traders, where I teach traders technical analysis based on realistic probabilities, not none of this bullshit, not none of the hype. I'm going to teach realistic technical analysis that you can use on a day in and day out basis. I'm a full-time options trader as well as futures trader, and I like to put these analysis videos out there so we can have a better understanding of the market so we can all profit. Again, I'm with Evolution Traders. That's my team. That's who I'm rocking with. So let's just go ahead and dive into the chart. What we're looking at here is the Nasdaq 100, which is ticker symbol QQQ. So on Friday, we closed at a price of $358.13, essentially flat on the day. So if we can go back to Friday and kind of think about that price action, we had that big gap down in the market, right? So we had a lot of stocks open up lower on Friday than they closed on Thursday. You know, we had some stocks kind of wash out in the first 5, 10, 15, 20 minutes of the day, immediately stopped and sort of reversed that whole gap to kind of fill that gap. So where do we go from here? Should we be looking to kind of short the market? Or should we take a realistic realistic approach with our expectations? Okay, so what I mean by that is I'm starting to draw out my supply and demands here, my macro supply and demands. Okay, so what is that going to entail? That's going to entail me looking at the daily time frame, and it's going to require me to go back 1, 2, 3, 4 months worth of data to kind of see where are these potential big supply and demand zones, these support and resistance areas that we can kind of work off of. So if you kind of notice, ever since we lost the 20-day moving average going back to August the 2nd, so I'm kind of highlighting it there. Let me get my drawing tool here. So if we kind of look at this day here, we closed below the 20 SMA. We got our confirmation below that. We did have 2 days of trying to back test that 20 SMA, followed by the washout. Now, to a lot of you guys in Evolution Traders, a lot of you guys know my scalping strategy utilizing the 20 as well as the 200 SMA. It also works when we're talking about swing trading as well. So maybe if you're okay assuming a much larger risk and much, bigger swings in the overall market, and maybe, swing trading is more your style, look for those closes over under the 20 SMA, and you can really ride those out for good gains. Again, that'll be a separate video for another day. But what we're looking at here is once we started to close below this 20 SMA here, we got 3 days worth of consolidation followed by the drop. Now this is a 1, 2, 3, 4, 5, 6, 7, 8 day drop. So essentially we had about a 2-week decline here in the Nasdaq 100. And obviously if you do trade some of these stocks, you'll see things like, Nvidia and Amazon and Apple. Some of these names got pulled. But if we kind of go to, Friday's price action, we've seen that very aggressive reversal. Now, does that mean that the selling is over? Absolutely not. Does that mean that we're not going to go lower? Of course not, right? Does it mean that we're not we're not possibly testing all-time highs? Who knows, right? But one thing that I do want to point out here, and what I can see playing out, is something like this, right? So I can see a little bit of a bounce, okay? I could see some choppiness action. And if we do get rejected around the 372, 375 mark and we start to head back down, I know that if we do lose Friday's lows, we've got a clear shot down to around 346. Now, the reason why I'm going to say 346 would be down in this area here is because if we go back in our data, right? If we go back in our data, let's first off see why we bounced in this specific area. Why do I have this, demand zone drawn out here? If you look at where we pulled in here on the 17th and you look at where we dropped to on the 18th, if we just kind of go back in time here, look at the last time, okay? Or actually the second to last time, right? Because the last time we tested the 20-day moving average, we lost it. But if you really look at this bounce here, going back to 626, look at how we closed with an inverse hammer candle here below the 20 SMA, and we got an aggressive reversal bounce, almost an engulfing candlestick, followed by a couple of days of consolidation, a gap higher, retest of the 20, and then we had that nice run up into 387. Now our run kind of topped out here at July the 19th. That was the highs where we put in there close to 387, 389, 388 area, and then we've been pulling back ever since. However, if we kind of go back to this time frame here, we go back to this point in time here, this area acted as an area of demand once. Okay, if we kind of go back a little bit more to the left, let's look at dates between 5/30 and let's say June the 9th, right? So we've got a good 2-week period here where the market was extremely choppy. We came up to this range, rejected, up to this range, rejected. We teeter-tottered with trying to break out here on 6/2, 5, as well as the 6th, as well as the 7th. And then we came back down again. So I'm coming up with a level of 346 as an area that acted as support prior. So if we do get this little bit of a bounce, we get a stalling out process here. And I would say the stalling out process could be somewhere in the range of 370 to around 373, 375. Okay, so a 5-point range in here. And what I'm actually going to do, okay, what I'm going to do is put another little bit of a supply zone here. So if this is going to be our demand, I'm going to go back to this high here on June the 16th. And if we notice something here, this high on June the 16th, if we go over to current time, is correlating with the 20-day moving average. So what I would be looking for in this particular situation is for this area where we rejected here and pulled back, rejected here and pulled back, acted as support here, acted as resistance here, to act as resistance here. So what I'm going to be looking at is this range between, realistically between 370 and probably 374, 375. Okay. So this potential zone here, I'm going to go ahead and make red. And the reason why I'm going to make this red is because I'm expecting this to act as an area of supply. So if we do get a bounce, I would look for a bounce to start stalling out in this area. And if we don't really get above this supply zone here, where we kind of back test and hold and make a move higher, and we do something like this where we come out of this zone and lose it, I would be looking for a short position here into this demand zone, sell for profits here, and then take another short once we clear out this demand zone, back test to show that it's going to act as an area of new resistance instead of support, and then short it into 346. And I would look to take profits in this zone as well. Okay, so right now, just looking at the chart, does it look like it's time to start shorting the market here? Or should we look for a potential bounce where we can maybe add some value if we get rejected in this zone to start shorting up here, okay, short here, to potentially play this back into our demand zone, okay? That's one possible outcome and scenario that we could be looking at. Now, let's say, for example, this week we open up, tomorrow's going to be the 21st. Let's say we open up and we do take out this high from Friday and we put in a little bit of an inside bar going back to Thursday, and we kind of stall out, and then we get some drastic pull on earnings. Some earnings that we're going to need to look at this week is going to be NVIDIA earnings on Wednesday. But let's say we only get a 1 or 2 day dead cat bounce. The moment we start to lose Friday's lows, I'm going to look for the short position. Okay. So if we never make it back up to the 20 period moving average to test this zone, and let's say, for example, we only get a 1 or a 2 day kind of bounce, and then we just kind of roll over and come through this zone, I will be shorting in this area and looking to take profits into 346, and then looking for 346 to kind of hold. Okay. And this would be essentially the move I would be looking for coming out of that zone. Now, again, we can play this every which way, but if you did short on Friday, with anticipation that we're going to give those gains back, not saying that you're going to be wrong, but what I am saying is that potentially you could be looking at the market, have a little bit of a few days worth of either a distribution or a little bit of a bounce. Okay. Now, again, if we gap up tomorrow in the overall markets, okay, meaning, let's say, for example, that the triple Qs open up here, right? If we gap up in the morning, put in a little bit of high, and then start to roll back through this demand zone and we lose Friday's highs at any point in time, boom, short position starts here, and that could be as soon as tomorrow. However, if we do not take out Friday's lows, I'm not really going to look to just try to short into the hole when potentially we need to see if this prior resistance, this prior support is going to act as a level of demand here. If we just kind of look at the chart pattern, okay, and if I kind of draw this up for you, if we look at the chart pattern acting as resistance here, we get the breakout, we get the retest, we get the consolidation, followed by the continued breakout. Now that we're coming back into this zone where potentially we're looking to break down, this area is being tested right now. So this pullback is healthy. Is it enough of a pullback? I'm not too sure yet. The market's realistically been running up since January. So, you know, we had a good 6-7 months where we were just kind of streamlining higher. This could be a short-term kind of area for us to bounce. I would need us to get over that 372, 375 area, put in a high, and then come back into this zone, consolidate, and then come out. And that's essentially when I would be looking for the potential add would be in this zone. Okay, that would be the potential add if we do start to go from here. Okay, now again, if you are going to go long from here, you would use Friday's lows as a stop, and you would use this demand zone as a stop, because if we do lose this area, I'm willing to bet 90-80% that we're coming down into 345, 346. Okay, again, now if that happens, that's okay. We can catch a little bit of a short-sighted bounce here into the 345 and 346. But right now, potentially, I want everyone to be prepared, and be prepared meaning being able to play both sides of this market, because where we're sitting at right now, there's no real clear indication that we are going to continue this bounce. However, it's a possibility, and we want to use Friday's lows as a stop to potentially make some money into this zone here. And then, you know, we need to also be ready for if maybe we only get a 1 or 2 day dead cat bounce, and then we start to roll over and lose Friday's lows and lose this zone, we need to be ready to act into that 346. So again, if you're a short-term trader, day trader, scalper, you've got to be ready to go on both sides of the market. Okay, we can't come into the market with one particular directional bias, meaning I believe that we're going to bounce from here and that's it, right? I believe that we're oversold and that's it. We're going to be testing all-time highs, because the moment you start to lean too much into your bias is the moment the market's going to correct and absolutely smoke you. So again, be able to play both sides of the fence here, be able to adapt, be able to kind of, you know, pick and choose where you would like to play the market. Again, if you're not so much of a good short trader, then maybe kind of hang out and play the dead cat bounces, right? If you're not so much of a good person who goes long and maybe you go short, then maybe potentially wait for the bounce and allow us to lose this demand zone and then take your position. Again, if you're like myself and you really don't care which direction that the market is going, you're just looking for that area of opportunity where you can get in and make some money, be ready on both sides, right? So I can't sit here as a day trader and as a scalper and tell someone else that, nope, we're absolutely going higher. Nope, we're absolutely going lower. Because for me, it doesn't really matter. I can see both sides, right? I play a little bit with the bears and I play a little bit with the bulls. So I see both sides to this picture here, and I'm going to be ready for either side. Whichever side wants to take charge and dominate, I'm definitely going to roll on the winning team and try to make my money there. So again, this is looking at the Nasdaq 100. This is looking at the Qqqs. Again, guys, I hope you enjoy this video. If you do, please do me a favor. It's very, very important that each and every single one of you guys hit that like button, hit the share button, the subscribe button, leave me a comment, hit the bell notifications is very, very good too for my channel. It helps this video get out to more traders. Again, take this information and utilize it, okay? Run through the situations, pull up the charts on your own, start marking out your own supply and demand zones, and start looking at what I'm seeing, right? You want to see what I'm seeing. I understand here was an area of resistance, right? I remember D said that this was an area of resistance, but when we broke through, we put in that new high and then we back tested, right? So this is a classic break, retest, consolidate, right? Distribution, okay? Distribution, followed by the next run up and the new high. Now, as we came down, what level are you guys right now? You should see what level are we looking to backtest? The level we would be looking to backtest was the prior highs, right? So if this was the first high, this was the retest. Now we put in a new high. What did we do? We came back into this zone, okay? Into this zone, and we back tested. And when we back tested this last time, we went through a little bit of distribution, which we should have been focusing on this period here, right? And I was kind of focusing on it with the guys in Evolution Traders. But the longer you go sideways where you're stuck in a range, it doesn't matter if we break out to the high side, right? Or to the downside, that next move is going to be explosive. And it absolutely was explosive, and it was explosive to the downside. Okay, so once we started to lose this range here, we lost these prior resistance levels that did not act as support here, we absolutely flushed. So again, start looking at this and start trying to analyze it on your own so you guys can kind of see and take these trades a little bit more comfortably. If you guys are looking to trade with me and you guys want to get access to the rest of my study guides, you guys want to get access to the courses, the live chat room, and the community, and the one-on-ones, definitely become a lifetime member at evolutiontraders.com. I'll see all of you guys on the inside. And again, make sure to hit that like button, and I'll catch the rest of you guys here on YouTube tomorrow.